It's TA with MK. It's TA with MK. Gents and ladies, no time to waste. Don't be afraid, it's time to trade. Let's start your brains like high-speed trains. Storm these games like hurricanes. It's time to save this herd this days. Put on your cape and learn the phrase. It's TA with MK. It's TA with MK. Hello there. In today's video, we are going to discuss some of the more common reversal patterns as far as it relates to price action going one direction and then reversing to go the other direction. Things to look out for, patterns and concepts, things like double bottoms, higher lows, double tops, lower highs, and so forth. If you're liking the content, please remember to like and subscribe. And let's dive in. All right, we're gonna do our absolute best to keep this as simple as possible. So to start out, we're gonna go over the two most common top patterns and bottom patterns to look out for as it relates to price action. Let me get my paintbrush out. Now this first one on the top left here, this is what's called a double top. Basically, price action puts in a high, a low, a higher low. So it's in an uptrend, right? And then it puts in a high and a low. And then what happens is that the next high, rather than being a higher high, is the same high, right? Around the same level. Then what you're looking out for, now the last high before the double top is considered the neckline, right? What confirms a double top is if you break down below that neckline, so the last higher low, right? And now you get this retest of the neckline, a bearish retest on the underside, and price action starts to go this way, that confirms the double top. The next one down is a lower high, which is essentially the same exact pattern, just duplicated, but just showing you that this circle that I have here is the point where you went from a high, higher high, right? You had a low, a lower high, a higher low, sorry, another higher low. Well, then after the double top, or whatever happens up here, this low right here is lower than this low, right? And so that could be kind of the first warning sign of a possible trend reversal to the downside. Obviously, you could couple that with this double top neckline confirmation as well. But either way, once you get this warning sign of a low that's lower than this one, if this next high isn't higher than the previous high, then you're looking for the start of a short or midterm downtrend. All right, got the chart cleaned back up. Now we're going to move over here to the right side and talk about two of the most common bottom or bottoming patterns. First, we've got the double bottom, which is just the reverse of the double top, right? You've got this low, this high, this lower low, this lower high, this lower low, another lower high, right? So you're in a downtrend. But then you get a bounce at the same level as the previous low. Well, the neckline for this is going to be your last lower high, right? If you're able to break that, so here's the neckline, last lower high. If you're able to break that and then flip that level, which is I've circled in blue here, as support, that's the neckline, then that could be the start of a trend reversal to the upside. You'd be then looking for, of course, a higher high, higher low, higher high, trend reversal. And then a higher low down here, same thing, just the reverse of a lower high. You've got this high, lower high, lower high. Flip side of that, you've got a low, lower low, lower low, right? Again, in a downtrend. Now, what you're looking for at that case is price action, whatever your last lower high was, which is here. If price action can break above that and put in its first higher high, then you're just looking for the next low to be higher than this previous low down here. Could be even down here as long as it's higher going up. Then you're starting to look at a possible short or midterm uptrend. And we know it's always easiest or best to show some examples on some actual charts with real coins. So here is a Bitcoin 1 hour chart showing you kind of an example of a double top. So back here we had a low, a high, a higher low, a higher high, higher low. But then kind of in this same zone, price action got met with the same level of resistance, which was okay until we lost, here was the previous higher low. We lost that zone or the neckline, retested it bearishly, and that was kind of your signal of the trend reversing to the downside, which it did, right? We're going to hop over to a Bitcoin daily chart to show an example of the importance of a lower low and then a lower high, right? So price action back here had this high, pull my paintbrush back out, had this high, this low, had a higher high, higher low, higher high, higher low, right, higher high. But then this low right here was lower than this one. So that was kind of your first warning sign, right? What you were looking for then was for this next high, in order to invalidate that, to push higher than this one. Well, once it pushed up here and wasn't able to push higher than this one, that confirmed a higher low, at which point was confirmation for a short or midterm downtrend. Obviously, this one led to quite the dump. This is the dump back in May. But at any rate, it did signal the change of the trend. And now we'll just quickly hop over to an XRP chart. This is an 8-hour chart showing an example of a double bottom. Also going to show you a failed example of a higher low. So first we'll show that over here. So price action had this high, it had this low right, it had this lower high. Now it put in a higher low here, but this being the last lower high, it would have needed to break this, retest it, and that would have confirmed that potential move to the upside. It still acted as resistance, put in a little double top and went to the downside. Now, the example of the double bottom, you had this still lower high, lower low, lower high, right? But then you had it bounce at the same level or zone as back here. And then this being the last lower high right here, it confirmed this double bottom when it broke above that neckline, retested it, and started trending this way. That confirmed the double bottom there on the 8-hour chart for XRP. And then our final example will come on this XRP 4-hour chart, where we're showing the importance of a higher high when you're in a downtrend as far as spotting a reversal. So we had this high, low, lower high, basically, lower low, lower high. It was in a confirmed downtrend here, lower low, lower high, right? So we're in this downtrend. Then we come down here and we have this low. We have these highs right here. We have another low, and it wouldn't have mattered where this low was. It just happened to kind of be a double bottom, but essentially what you were looking for here is you had this low, price pushed up, and then this high was the first high that was higher than these previous highs here, right? So what you were looking for, as far as the trend potentially reversing here, was that this next low was higher than this previous low down here. Well, it was. And then, of course, you had another higher high, another higher low, and it was just kind of the start of a short to midterm uptrend or trend reversal. Now, keep in mind, sometimes it's a major trend line that's being broken, that is the beginning of an up or down trend. Sometimes it is price levels, support and resistance. Price is bouncing multiple times at the same super strong area of support, or it's being rejected at the same area of super strong resistance. The importance with trading is putting all the pieces of the puzzle together, or finding what's called confluence. So I'm going to link that video that I've made about confluence in the description, as well as my video about price levels. If you haven't watched those, I would suggest watching those and combining them with the ideas in this video. Again, if you're liking the content, remember to like and subscribe, and we'll catch you next time. It's T-A